Hi everybody, it's McDonald speaking. Thank you for joining us once again for the ICE commentary on the Russell 2000 and equity markets. Looking at the Russell 2000 here, and let's just start with a monthly chart. So what I was talking about last month and what I've talked about for quite some time here is that we're just going to get healthy pullbacks on the way up and a good uptrend anyway. So this was our moves down back here in 2008. Then we ran up, we had a nice pullback here. We ran up, we had a nice pullback again. As of last month, we were starting to look like even rejecting it and coming back up. Now, as of this month, we're starting to look like coming back down again, at least partially. Now, my longer-term view, my very long-term view, certainly much longer than the outlook for this video, which is just this week. But my longer-term view has been that we will be going up, barring any major catalyst, so any major catalyst to force us down. Now, that view has kind of been my short-term view as well, even back here on the daily chart now. While we're within this range, my view has still been I'll trade to the upside or the downside, but I'm swaying towards the upside unless there's some major catalyst comes out, some major event which happens that makes markets go down. Now, last week we started to get a bit of a catalyst, or the potential for one, and we had the sell-off on Friday. Not huge, but certainly we had a bit of a sell-off when we looked like we probably, if anything, should have been going higher. We sold off a little bit and we rejected that 700 level. Now the catalyst is, and what the press is speculating this week will happen, is a Greek default. And if there's a Greek default, it's a lot of trouble for the German banks and the French banks, etc. And it's bad news for world markets generally. Bad news for banks, bad news for markets. So there's the potential for a catalyst this week, and it certainly makes me be very, very cautious on anything kind of trading daily or weekly charts. Anything to the longer side over days and weeks, it's quite a risky time, I believe, to be involved in terms of we just don't know what will happen. We don't know if that Greek default will happen, and if it does, we really then need to be able to see what is the impact on markets. One thing that excites me about it, though, and I don't wish bad economic times upon any country or any of us at all. However, one thing that excites me when big news like this is happening and when big things happen is the markets get very, very volatile. And by volatile, I don't really just mean choppy, I mean they fall like this. And they can rise like that as well, but more often than not, they'll fall and they'll fall quick. So if something does happen, then in that respect, it's good trading times. It's good trading opportunities, and I look forward to good trading opportunities. I still, in a way, and I don't like to use the word hope in trading, but I hope it doesn't for the benefit of many people. And I'd much rather see the market just carry on in a nice, steady, consistent uptrend. However, there's always the chance that that won't happen. So looking at it this week, that chance seems to have been increased. Therefore, I'm not going to be looking to trade for the longer term. I'm looking to be focused very much on the shorter side. How will I trade, therefore? I'll be looking to trade around these levels. I'm looking to trade intraday. So, for example, we've talked about the 700 level for a very, very, very long time. Let's come and have a look at a 15-minute chart just for a minute and see what happened as the price came back and tested this level. So price here, and I've still got my lines drawn in, price had made the move all the way back down, right? So it had broken up above 700, made the move all the way back down below 700. As it pulled back to 700, pulled back right back to 61.8%, clustering with 700, clustering with major support and resistance, broke up above it a little bit, made some lower highs, broke down through, and gave a really nice breakdown below 700. This is the exact kind of thing I'm looking for. I'm looking for trading opportunities around these big figures. So at the moment, the figures are 650 and 700. I'll be looking for any short opportunities if the market tests 700, and I'll be looking for any long opportunities around 650. I'd be much further inclined to be trading much shorter term moves on the long side because I think the risk this week is to the downside. Doesn't mean we can't go up, I just think the biggest risk, i.e. some big event happens, the biggest risk is that we get a really fast fall. And that happens very, very quickly. So I won't go long just because we get to 650, and I won't go short just because we get to 700. I'll look for multiple reasons to be trading around those levels, just like I showed you on that previous 15-minute chart there at 700. If we do break down below 650, our next level is 600. And 600, I think, will provide a really good opportunity. Unless there's a major fall, a really big collapse, and some really bad news, then I think 600 especially could provide some really good trading opportunities. Another thing that happens when markets get really volatile is that the gaps tend to close better. The gaps haven't closed as well the last few weeks, however there's still been some good opportunities here. So for example, this day here is another example of an opportunity for me at 700, and let me just zoom in and show you this. I'll show you just how I'm taking advantage of intraday trades. So here was a gap down, market gapped down, we got a big green up candle. On the next candle, the market broke up above 700, just gave a nice chance to get long on the break of 700, stopped below these lows, and came up and closed the gap, and actually gave more like a 2-to-1 reward to risk on that trade. That trade, by the way, I put out a heads up video to my newsletter service about 7 hours before that trade actually triggered. So I do put these calls out there as well in real time and show people what I'm doing, and that was one I put out there literally 6 or 7 hours before the trade triggered, and it was a gap down in a daily chart uptrend, and around that 700 figure, giving a good opportunity for an entry for the gap close. So that's a couple of examples of the way I'm trading around these levels, and certainly that's what I'll continue to do this week. And in the longer term, in the very longer term, I don't have much of a view simply because this monthly chart is still technically in an uptrend. The weekly chart here is very much now in a downtrend and looking like we've just put in a lower high at this level here, and therefore with the potential to make lower lows and come down and test 600. Whereas the daily chart is in a period of no trend, where it's making higher lows and it's now just made a lower high. So we've got no trend on the daily, a downtrend on the weekly, and an uptrend on the monthly. That just leads to confusion, leads to no clear direction, and there's the potential risk of the news default. So therefore, very, very focused for me on short-term trading around major support and resistance levels on the Russell 2000 and equity markets for this week. Happy trading all, and look forward to another assessment next week.